Yo, yo, yo. Morning, Will, Romer, JH, Cloud, TOK, Nick. Good morning. Appreciate it. Yeah, I had my editor create something, and I think he turned out really, really well. So, shout out to him. I think that turned out really, really well, to be honest with you. Let's give it 1 second. I'm going to flash this disclaimer, and then I'm going to get into the live stream. So let me know if you can see the screen there. You should be able to. So make sure everything's good before we get into it. Let me know if the new banner, if that's too little, too big, perfect. I think it's alright. If you guys can like the video, I would appreciate it. That way we can get it out into the YouTube algorithm. Nick G, oops, wrong account. You're good. Will, appreciate it. Alright, as long as everything looks good, and we're streaming. If you guys, again, there's 40 of you in here. 50, if we can get that up to at least 30-40 likes, I would appreciate it. All you just like the video real quick. It takes 2 seconds. You gotta increase the input volume, alright? How about now? How's this sounding? I probably turned it down a little bit, but I don't want to make it too loud. We can do this so it's really at just about max. Sorry, I'm looking at my levels, I'm making noises. Yeah, it should be good now. Should be a lot better. I just want to make sure it's not too loud. I'll start the stream when we get 30 likes in here. We got 15 more. Yeah, I just don't like having the mic close to my face. It's an annoyance to me, so I have to have it over here. More Nikki. 9 more likes. Let's get to 30. Eight more likes. Come on, people. Morning, Fly. How are you? Perfect. So let's get into today and what we're looking at. If you watch the weekly forecast from yesterday, I think it outlined at least what we should be anticipating this week. We got an economic calendar driven week. So we have tomorrow with core CPI or core PPI, then Wednesday CPI, Thursday core retail sales, and then Monday and Friday we don't have news event drivers. So that should put us at a week where Monday and Friday, I wouldn't be looking to touch too much of those days, and we'll see what today provides. But if something doesn't present itself where I feel comfortable, then I'm not going to touch it, because anytime you have major news event drivers ahead of you, it can engineer liquidity. It can do a lot of things in terms of messing around with price. So we're going to take it probably easy today, and then see how tomorrow and Wednesday play out. So let's see here on the daily time frame. We dropped off lower right off the beginning of the week. Sell side liquidity pool is resting right here. We'll see if we want to run for that or not. We talked about pretty in depth yesterday. If you didn't watch the weekly forecast, that was a really, really good in-depth overview, I think, of how I was viewing price, how we got to the conclusion as far as where we're at today from last week, how we were able to determine that we should expect lower prices. So if you guys don't watch those weekly forecasts, man, I really, really recommend it, especially if you're newer. Obviously, if you've been with me, you don't really need to, but if you're newer and you're trying to learn how to understand narrative, how to understand intermarket relationships, S&T, man, the weekly forecasts, I really do break down how to get to some certain conclusion as far as what you're looking at. That's the most important. If you don't have a framework, you don't have a bias, you don't have anything going into the week or going into a session, going into a day, then you're just driving blind. You don't really know what you're even looking for. To be honest with you, I think today we might expand into this low today. We might want to take that out. So we'll see how that looks like, but since we've opened, we've just immediately have dropped lower, and we might want to take out this sell side before any sort of small short-term retracement. On the 4-hour time frame, immediate rebalance almost into that low. And since we're so close in proximity to this low here, it looks as if we may want to take out that low. The hourly time frame, we retraced into this imbalance here, right? So this imbalance here, we've worked away from that. And since we're pretty heavy on the bear side and we're close in proximity, which is key, close in proximity to that sell side liquidity pool, I would be on the side of saying we may want to expand into that low and expand into the overnight low down here, and potentially after that have some type of retracement off of that. But we'll see how we open, and from there we'll just we'll take it. So we'll see how we open. I probably wouldn't look to engage until the macro at least, and then if there is something today, I'll engage with it. If not, then we have some good days ahead of us, which are tomorrow and Wednesday. So if you're just tuning in, I appreciate if you guys would really, really like the video. It means a lot, honestly. I hate saying it every single day. It gets really repetitive, but it really helps the stream because it puts it out there. And we want new people in here. We want more people viewing this. So you're probably going to hear it every single day. I know it gets annoying, but it just is what it is. 5-minute time frame. Thank you, Igor. Always coming in clutch with it. Again, going off the time frame that we just looked at, the hourly, and looking at this low down here at 20,640, we returned into that premium imbalance on the hourly. So we'll see how we drop off of the open and whether we continuously keep pressing lower into these lower objectives or not. But I think the way we're trading already, it may start off the week where we have a sudden drop and then have some type of retracement / consolidation after. But we don't have any news event drivers today, so if price starts going stagnant, it doesn't do a whole lot. It is a Monday with no news event drivers ahead of major news event drivers. So anytime you have CPI, you have core PPI like tomorrow, major news event drivers, price can be stalled to engineer liquidity. So just be aware of that. Mats, what's up? I remember you, brother. How are you? Let's take a look at the minute time frame here. Hopefully the banner doesn't cover up the time frames. I think it does by a little bit, so I think all of you know where I'm at. So we've just opened. My focus for today again would be these two levels, and how we trade to them will be the question. I'm going to mark up a few things, that way we have an idea as far as what price is looking like. If we can get this to 75 likes, I'll give you all a, I'll give you nothing actually, but I would appreciate it. Nikki, yeah, but I would hope that if you're looking at your own charts, you probably know what time frame I'm at, and I usually only have a 1 minute and 5 minute chart up. That's usually the only time frames I have up, or a seconds chart. Thank you, Igor. I gotta mark that up. So if you toggle regular trading hours, we have our opening range gap, which is going to be above us, right? So this opening range gap is above us since we've dropped off the open of the week, and that was where last week's closure is from here to now today's open. We're going to have a significant RTH gap, or opening range gap, above you. So you have to keep that in mind, even if you're biased short, having that above you, or having that opening range gap above price can create complications as far as looking for lower prices. Unless we really just sink and leave that open, then it's a different story. Will, yeah, cookie. Four more likes, we're at 50 likes. I really want to grow the stream this week. I really want to be averaging, I think we can do it, 300 viewers by the end of this week. We'll be at 1,000 by the end of the month. We're going to gain momentum here. I'm going to start pushing content like crazy. Not just content, but actual useful information, unlike a lot of other streamers out here. That's not ego, that's just reality. Who does your marketing? Primarily just myself. I mean, I have a friend that helps at it, but it's primarily myself. Hidden, I appreciate it. Let's read the 5 minute chart here. So I want all of you, especially in your free time and when you're off the charts, especially if you're newer, and even if you're just tape reading, meaning you're just watching price, you're not engaging with it, is just to constantly be in the marking up state of mind, meaning you're trying to find every single PD array that ICD has ever taught, and you're trying to mark it up and you're trying to have annotations on it. I know that I don't, because I've gotten to a point where I don't necessarily need to, but I see a lot of things in here. I see 3 PD arrays in here, and this comes with time and experience, but these 3 right here. So you have a mitigation block. This is not a breaker. Why is this a mitigation block? Because in order for this to be a breaker, this would have needed to travel above that high. Never did. It's just a lower high, then we made a lower low. So you have a mitigation block, you have an inversion, and you also have a sell side imbalance there. That's the reason why we expanded it off of that. Once we dropped lower on the 5 minute chart, this becomes a inefficiency with a bearish order block there. So that up close candle is your bearish order block, and you have this inefficiency which is resting right here. Sometimes you won't see me mark a lot of things up because it's either very tedious to do so, or I see it and I'm maybe not even saying anything. So you'll become at that point as well. That's the reason why ICD at times just says he has a naked chart, because it almost becomes second nature. But in order to be able to read this, especially as a newer student, you have to be willing to put in the work of marking these tedious things up over and over and over again until it becomes basically secondhand, where you can see these things very naturally. I want you to observe ES as well. So if you're looking for a trade idea, and let's say you're trading NQ, you need to be looking at ES very closely. And if ES is doing something completely different, that means it's decoupled. Meaning what? If it's decoupled, it's doing something completely oppositely the way the order flow is. So if you look at ES right now, ES is trading a lot higher than what NQ is doing. Does that mean that it can't snap into something where you end up wanting to trade it? No. But if it's doing something completely oppositely, it means it's decoupled, and that to me signals low probability, and I don't want to touch price until those become back into relatively in sync with each other, right? So to me, that's a pretty hard line rule. If I see those doing something completely different than each other, regardless of whatever my bias is, or if NQ's trading to what I think it will, I'm not going to be trading it until they get it back into relative sync with each other. That's just a personal rule, but it's something to observe. 75 likes. Let's get it to 75. Come on, people. You want to see me grow or not? I kid. I wish I had a bot. I might just make a bot that says like the video every 2 seconds. And you can see the more likes it add, the more viewership it gets. It's crazy how YouTube works. So observe how off the open, we're about 6 minutes into it, we'll see how NQ is about to make a lower low in here. So right underneath this low, NQ is making this lower low. Right? And what is ES doing? It's failing to make that lower low. Can it eventually sink and do the same thing and follow suit? Of course. But it's just something to note, especially off the open. Pretty hard line rule for me unless I'm feeling very confident or I'm feeling a little bit more risk on for that day. I don't engage with price until at least the macro. So at least until 950, I don't engage with price. So you may look at this and be like, well, we dropped lower. There's an order block for value gap. It's a really nice short. It is. But if you look at rules and how they protect you over a long period of time, to be able to know when to exactly short off the open versus just following a rule set saying, look, I'm going to follow a certain rule set, and if I miss out on something, it is what it is. That comes down to discipline. So we'll see if we want to take out the overnight low, which is here at 20,693 or not. Exactly, Will. Right off the beginning of the week, we usually see or observe ES and NQ a little bit decoupled away from each other. It's pretty typical on a Monday morning. Ten more likes, we're at 75. And then I'll probably stop asking. Nikki, my worst trades are always Monday trying to trade before 10 a.m. And yeah, you'll see that your own rules and your own things that you come up with are just through personalized experiences that you just are not fond of, you're not happy with. If you're taking a lot of losses over and over again with the same characteristics, same whatever it may be, whether it's the model or the time, then you start exiting that out of your trading. You don't care what anybody else says to you. You know that doesn't work for you. So if you see me have rules and things that you agree with or don't agree with, it's just my own personalized experience. So you can either take that and say, look, I want to incorporate that or not. But everybody has their own personalized experiences that say, man, I really don't like when I trade at this time. I don't like trading this because it's hurt me a lot, so I don't want to trade it anymore. So observe how NQ made a lower low and ES didn't underneath this low here at 7 o'clock. What made you come back to YouTube? A, I do enjoy it. B, I want to grow more on social media. I have a huge presence, so I may as well make it bigger. And we'll see if I end up doing Robin's Cup on YouTube this year or not. Those are a driving factor for sure. Thank you. First presented FEG is here. So that's our 9:30 first presented FEG between 9:35, 9:36, and 9:37. with this long wick, do you consider the VI or no? Which time frame are we talking about? One minute. Unless I'm not seeing the volume imbalance. I don't see one in here. If you do have a volume imbalance with a fair value gap or inefficiency, you consider the volume imbalance with the inefficiency together. If that answers the question. So observe how ES and NQ are trading a little bit differently. NQ is a little bit higher than where ES is at. That does mean that a few things. Either there's a decoupled between the two. There could be an SMT between the two. Or eventually ES could get into sync where it starts to really drop off with NQ. And you're going to see NQ slice through the lows down here at 20,693. The micro contract is always a little bit different than the mini, so I'm always paying attention majority of the time to the mini. That's where I'm placing emphasis on. We're at 73 likes. 2 more likes, people. Or if you want to make me happy, get it to 100. Market Whisperer, what's up? Remember the hourly time frame? This was like the main emphasis, at least of this morning, was this hourly time frame, this hourly imbalance, and how we've utilized the CE of this and moved away from it. Little pointer or tip. Once we come up into that inefficiency and we work away from that inefficiency, I want you all to observe the wick, this wick here, and how we've moved away from this wick, right? Once we've stabbed up into it, the next candle opens, we work away from the CE of this wick and moved and dropped away from it. So Monday morning, especially with no news event drivers, I'm ahead of CPI, core PPI, things like that. You're going to get price action that may be a little bit more difficult. So you have to be aware of that. You can't just be willing to go gunslinging into a Monday morning open. I rarely ever do that, ever. Rarely do I ever go into an open. We're about 13 minutes into it. And if you see a lot of traders, especially in the ICD community, they're going to be taking a lot of losses within that first 13, 15 minutes, or even 20 minutes, even 30 minutes, because a lot of people are very eager to do so. I'm not saying I haven't, I've done it plenty of times, but that's where rules come into play and where you start drilling and say, hey, you draw the line in the sand when it comes to discipline, when it comes to rules. I talked about this last year. It's like, if you have certain rules that you've came up with, you draw the line in the sand and say, look, I'm going to stand on this side and I'm not going to do anything, regardless of how enticing or how intriguing that setup may look, because I know my rules tell me to set out a price, and I don't care what anybody else is doing. I don't care if people think that, even if the trade idea that I'm looking at works out, right? Even my rules tell me to stay out, and I have a bias, I'm really, really confident in it, I still will not trade it. So that just comes down to drawing the line in the sand and having discipline and saying, look, I'm just not going to do it. It is what it is, and I know that there's an abundant amount of opportunities outside of my, that work within my rule set that will provide me enough opportunity to get into the market. You have to have some type of standard, some type of rules to your trading. Otherwise, you're just doing whatever you feel is good for that day, for that session, or for that moment. That's just not a way to trade, man. And I think that's what a lot of the newer students they can't grasp, or they can't have the understanding. And I didn't either. It's very difficult at times. It's very difficult to sit there and have the discipline to say, look, I'm just not going to do anything because my rules tell me not to. That comes down to emotional control as well. So I want you to observe is you're seeing this reaction at the low here due to ES as well. ES never printed that lower low, which I told you to take a look at. ES was never printing that lower low. So you're seeing this type of reaction here as well. We generated more liquidity at the lows. Bit of high resistance, 5-minute retrace back up into this bearish order block. This would be an inversion as well. And into that sell side imbalance again. Would I be touching this? No. How did we drop from 200 viewers to 155? I just looked over and I was at 200. How did we drop 50 people? YouTube's screwing with me. There's no way simultaneously 50 people just left. You guys are doing a good job on the likes. I do appreciate it. So we displaced higher, dropped down to this buy side imbalance. First presented FEG is there. Probably, Nikki. I think I just need to start taking a trade every 2 seconds. That's the way it's always on the screen. Kid. To make note as well is going into a session like this, and this is not an always end-all be-all, but if you're in this scenario, since we're bearish, or at least looking for lower prices, currently that can switch, but if you're looking for lower prices and you're looking, let's say, for the sell side liquidity pool, since you've came into the open, and this is midnight open here, this is how I utilize it, just thought process, I have a lot of different ways, but since we're underneath the midnight open, and we're even underneath the 8:30 open, what does that mean? It's already inside of a discount. We're already inside of a discount, like a deep discount. So anticipating a roll off lower right away off of the open, and you're inside of a discount, pretty deep, it's going to be a little bit harder. The best case scenario, especially if you're bearish, is you're above the midnight open and you're already trading inside of some type of premium, right? Inside of some type of premium PD array, where then you're going to see a drop off of that and trade beneath the midnight open. Right now, this favors, as far as midnight open goes, it favors bullish prices, because if prices is inside of a discount, it's underneath midnight open, and it's underneath 8:30 open, that means price is inside of a discount. And price would maybe want to trade higher to gravitate towards these relative equal highs and maybe get above midnight open. So it doesn't always mean that. Price can be underneath the midnight open, be underneath the 8:30 open, and it could still roll off lower. Narrative and everything else comes first. Then you incorporate those things, much like S&T. So you have to be aware of that. I mean, as far as what ICT mentioned over last week, the midnight opening range, I really don't see myself utilizing it, to be honest with you. We can mark it up while I'm sitting here, but I don't see myself utilizing it. Not that it's bad, but I just don't really see the point in it. Midnight open is here, at least the range, I mean. That's your range. The highest high and the lowest low within that range. ORG is 246 points. Would you not consider bearish prices? Or bearish session, I should say. Again, just because the opening range gap is 246 points, it doesn't necessarily... it could mean that. It also could mean that price would maybe want to retrace to fill it in. Opening range gap, midnight open, SMT. What else is there? There's a lot of things that are confluences that change depending on the state of what price is doing. It always comes the framework, the narrative, and the bias first, and then you incorporate those things. Intermarket relationship, same thing. If you guys can get this to 100 likes, we're at 89. That would be tremendous. So in here, if you're trying to decide what price is trying to do, I think that's just in terms of really gambling, to be honest with you. I think you're just trying to gamble. This is aimless, really trading. You can see the coupledness between ES and NQ. I could make the framework that prices displaced higher. We've dropped into this buy side imbalance into the first presented FEG, which acts as an inversion, and we could potentially send it into the buy side up here at 20,846 ish, plus the mean threshold of this bullish order block here. But on the flip side, we've also retraced into this from that dealing range high to low. We retraced into this premium. It could just be high resistance, or we're just kind of sitting in here, and then you can see a spool off lower. So I'm not looking to do anything with it. I'm not trying to just guess. A lot of my mistakes as a younger ICT student is trying to force something. I think that goes for all traders in general, but if price is not clearly one-sided and you can't really make, with clear, concise evidence that this is, there's a whole bunch of evidence for this one case, then you really should be trading it. Five more likes. We're at 100 likes. Let's see. Can we get to 300 viewers today? Can we do that? Can I already complete my weekly objective goal? Welcome if you're new. I appreciate everybody's tuning in today. If you're new, drop a comment. So observe what ES is doing. ES is printing a little bit higher as well, so it may be leading the correlation. If you're utilizing ES, not only are you utilizing it for SMT, you're utilizing it for a weak and strength in this direction. So if you're trying to trade one, you want to be looking at which one is weaker or stronger, and you also want to be looking at it to see which one is leading it. You may get the tip of the hat that it's going to start trading a certain direction because one is leading another one. Look at the way ES is trading right now. ES is trading a lot higher, so it's starting to lead NQ higher. So my eye starts to gravitate towards this buy side liquidity level at 20,845, and that's right about 25 or 30% of the opening range gap. So right there, observe how ES made a higher high and NQ failed to make it. So what is that? That's a bearish divergence. Does that mean that that's going to immediately start throwing in bearish prices? No. But you have to make note of that because that is a bearish divergence. If this thing wants to stay in a range, that NQ will never make that higher high. This may confuse people, but that also could mean that ES is just simply leading NQ, and eventually NQ will run out that buy side. And ES would be a lot higher at that point if it does. You have to be reading ES and NQ simultaneously together all the time. Reading them together. Not just the SMT between the two, but how the strength and weakness correlations are trading together. It's very, very important. If you see me looking over, I know you're looking at my camera, but if you see me looking basically almost at the camera, it's because I'm looking at my SMT monitor. I'm always, if you look at my eyes, I'm always looking at this monitor almost. And then I'll pan back to what I'm looking at, but I'm almost always watching these together. It's very, very important. you will learn how to read this market, especially NQ, if you read ES. Vice versa. If you trade ES, you need to be looking at NQ together. You can forget YM. You don't need YM. Read these two together. That way, you understand where you're at in this market. So since we got above this sell side imbalance, that turns into what? An inversion. Can you show your setup? Yeah, I can. Do you utilize in your analysis what M7 other sectors and ETFs are doing? No, I don't. I don't even know what the hell they're doing. I don't pay attention to anybody else. Now we can go down into a seconds chart and we can take a look at it, since if you're looking at a 1 minute, you're not seeing the inefficiencies form, but on the 15 second, you see this inefficiency form. Price trades away from it. It looks like we're about to run out 20,846. So I want you to observe, since this is the drill, look at where ES is trading. ES is trading a lot higher. I said if NQ gets these highs, then ES is going to be a lot higher, right? Because it already completed those highs a little bit ago. And if NQ is to get to these highs, then ES would be a lot higher because it's a lot stronger. What time frames, Jake? What's up? Hope you're doing good. Hope everything's good. I remember you, brother. What time frame are you watching? Mainly like a 5 minute or 1 minute intraday. Luke, bonds, yields, dollar index, foreign exchange. Yes. If you go over to my weekly forecast yesterday and even the week before, you'll see the entire structure of how I view this market, basically. I mean, that's the easiest way to do it, to kind of get in the insight of my mind. To make note, you're seeing a lot of you have to look at the economic calendar. We have no news event driver today. I'm going to state this over and over again, and I have to. We have core PPI and we have CPI ahead of us. Major news event drivers. Major. What is that going to entail? That's going to entail engineering liquidity. What does that mean? Well, does that mean that you can't find a setup today? No, but it means that price is probably going to be a lot of whipsawing, and it may stay in a tight range. So being aware of that condition, being aware of that forecast already going into the session protects me, or at least it gives me the idea going into the session that I should be a lot more aware of what price could be doing today. Rather than going in and saying, look, I'm going to find an easy setup today. No, I'm anticipating that price may be a lot more difficult. So we're seeing look at the price action we're doing in here. We're failing to run out this high in here. It's being a lot more reluctant to do so. If you look at this range in here and what we did, you're trading off higher, you're taking out buy side, you're dropping lower, you're taking sell side, engineering sell side beneath you, engineering buy side above you. There's liquidity on both sides of the board. So you also have that SMT between ES and NQ. ES is way up here, right? ES is way above, so that's a bearish divergence where you're already in a very just fickle, meaning difficult price range, with liquidity on both sides of the board. You took out internal sell side, but you also left external sell side underneath you. So in here, you could be looking at this buy side imbalance. You could be thinking, well, we have this inversion. We're within this buy side imbalance here. We have buy side liquidity above you. That's a decent model, but when you look at the framework with no news event drivers, those major news event drivers ahead of you, you have SMT on the opposite side of the board, you have liquidity beneath you, understanding the range that we've already been in terms of high resistance, it creates a lower probability model. I don't really want to put my money behind this where it doesn't seem that high probability. Well, exactly, yeah. I mean, with high resistance, sometimes it's harder to see it before it unfolds, but I've been seeing already this whole morning that this is really, really high resistance off the open, and this is what I'd be anticipating already on a Monday with no news event drivers. If I start seeing this, it makes me already aware that I don't want to engage with price right now. It's very high resistance. I could see this model. I could throw this on here, and I'm going to throw it on, and don't take this as a trade signal, but I could see this model where we expand away from this discounted buy-side imbalance, and we expand into the buy-side liquidity above us. I could also see the idea where we just leave the buy-side liquidity and we eventually drop lower, or we just do a bunch of meandering around doing nothing because of the condition and the state that we're in today, and we may run out for the sell side. So I'm just not willing to put money behind it. You're going to see that a lot of times where you see a model, but the conditions or the framework, the probability of it just is not very likely. So it's like there's no point in putting my money behind it if I'm not really certain in it. And if I get lucky, if I took this trade and it worked out, I could sit here and be like, it's perfect, great, awesome. But I know on another day where I take that low probability trade where I know the framework isn't right, the conditions aren't right, I'm going to end up getting stopped out. It's just not worth the mental capital. I may as well just save my money and save it for another probability setup where I think it's a lot higher. But you're going to get those emotions and those feelings of like, well, I see the model, I see the framework, man, I just really want to take the trade. It's like, dude, most of the times, if you journal your emotions before a really good trade, a high probability trade, and you're going to ask what's a high probability trade, you're going to know through time and experience what's a high probability trade. Where the evidence is so undeniably on one side, and it's not always going to be like that, but for the most part, you should be only taking trades that are almost undeniably on one side. You can see it with clear vision that it's, there's no opposite argument. There's no other opposite case that you can make. It's just, well, this is the only side that I could see working out. Obviously, you're going to get stopped out on those times, but you did the best that you could. You may have made a mistake. You may have just, been in terms of probabilities. You just got stopped out. That's part of the process. But I can see both sides working out right now, and I understand the condition that we're in. It's a low probability. I don't want to operate in it. If I already know that, why the hell do I need to operate in it? If it works out, eventually it's going to take out one side or the other. It is what it is. It doesn't affect me. I'm going to be more proud when I don't take some stupid loss. Bree, good to see you, brother. So what's this up close candle here? This is a mitigation block. It's not a breaker, it's a mitigation block. So we've dropped down into that mitigation block, into this buy-side imbalance. We'll see if this expands away from it and wants to run out for the buy side up here. And if it does, that's awesome. I'm going to sit there and be like, damn it, I should have been part of that. Nope. And I honestly hope it fails so I can just sit here and say, look, that's the reason why we don't do that. But CJ, how do I know when to enter into something like that versus now? Well, it depends on the framework and the condition. Those are most important. Yes, that would be a propulsion block. So you have your first order block. You just think about this. Propulsion blocks are just your second order block. As long as they're stacked on top of each other, that's a propulsion block. About 203 of you guys in here. I appreciate all the new viewers. If you haven't already, hit the like button. Bree, private was great, man. You'll see a lot of them in here that are still with me, man. It was fantastic, to be honest. So we're starting to expand away from that mitigation block and the discounted inefficiency, away from, you can see that's the first presented FEG here on the 5-minute, and away from that propulsion block. We're starting to expand away from it. Does that mean I'm going to operate in this? No. I've already stated that I don't want to operate in this. Bree, TBH, I've been profitable now and I'm on ICT strategy thanks to you. Hey, really appreciate it, man. It's awesome to hear. That's all you, man. It's never me. It's never ICT. It's never anybody else. It's always you. You put in the time and work for it. Just maybe helped you along the way. That's it. Sarah, appreciate you, as always. Glad to have you back. Glad to see you back in here. All right, as a drill, let's go into a 15-second chart here. Since we're already expanding away from that 1 minute point of interest, that mitigation block and that inefficiency, since we're starting to expand away from it, I almost doubt that a 1 minute time frame inefficiency or something like that's going to form. So that's where on a 15-second chart, I'm looking at this saying, well, that's where something would be of likelihood to work out on a seconds chart. The 1 minute time frame, if you're trying to utilize a seconds chart, you want to be looking at a minute chart, and if the minute chart is expanding away from a point of interest, that's where you can go into a seconds chart and start utilizing it. Romer, appreciate you, brother. So watch for 20,846, and if we get above 20,846, we're going to trade into this premium imbalance into the base, see about 50% of that opening range gap as well. And then this a little bit higher inefficiency there. So 20,846 been delivered there. You can see the seconds chart, beautiful delivery there. Now, as far as where we trade after this is a good question. We've taken out this buy side liquidity pool. We're digging into a premium. So really from this last previous dealing range high down to this low, we're now digging inside of this premium. So you could just be taking out, this would be internal buy side there inside the 5 minute. You could just be taking out internal buy side liquidity, and you see this drop lower back into the range. May want to run for the relative equal lows, which are resting down here. And again, do I feel any type of way, if you go back to what we were just talking about, do I feel any type of way like, well, there's this discounted buy side imbalance and mitigation block? I could see that framework play out. It's not like I can't see that. But I also don't feel any type of way about it because that's what my rules tell me. Don't trade in low probability conditions. Even if I see a model that's valid, even if I can see a framework that's like, okay, I can see it happening, and I even annotate it before it happens, just like I did from the 1 minute, even jumped into a 15-second time frame, said that, well, probably expand from here into the buy side since we're coming away from the 1 minute. That does not mean that you should be trading it. You don't have to. If you're willing to risk it, if you're a more risky person and you just want to throw your money wherever it wants, then sure, you can do that. There's times where I'm feeling a little bit more risk on for that day, and I want to do that. That's, is that a break in discipline or rules? Not necessarily, but it depends on the condition. Most of the time, you want to be operating in a one-sided condition where it's very favorable. There's only a one-sided argument, and the framework, the condition, the economic calendar, those things are all pointing to a favorable condition, not just like a condition. There's a lot of times where you're going to see a lot of conditions or models appear that you can see working, they end up working, but it doesn't mean you have to operate them. It doesn't mean that. And you should congratulate yourself. The only way you're going to reinforce that is if you're in a journal saying, look, type on a keyboard, hey, I saw this model playing out before, or at least I saw it potentially playing out to this liquidity level. I had the feeling of trading it, but I didn't. The model ended up working, quotation, but I didn't trade it. What do you put in after that? I'm such an idiot. Why did I not trade that? Or do you put in, good job, that was great discipline. I'm very happy I didn't trade that. That showed emotional control and discipline that I was able to sit still, even though I saw that model playing out. That's good positive reinforcement, rather than sitting there and criticizing yourself, saying, why did I not do that? Feedback loops, especially in trading, are very, very crucial. If you're constantly telling yourself you're an idiot, you're stupid, how the hell are you ever going to make progress? That's never going to happen. You have to be constantly positively reinforcing a lot of things that you do, and whether it's delusional, it doesn't matter, because if you're positively, even delusionally reinforcing yourself, that's eventually going to come into reality where you're positively making positive strides in your trading. So be very aware of that. He talked about that being your biggest cheerleader within your journal, because nobody else is going to do it for you. Literally nobody. You're the only person that knows what the hell is going on in these charts, and what you personally like and what your personality tends to gravitate towards. You can learn from other people, you can learn their strategy and what they're thinking, but you're the only person that's ever going to be able to actually be able to determine what you should be liking and not liking. Law of attraction, yeah, I mean, it's pretty basic as well, too. I mean, to me, it's just simple feedback loops. Nikki, trust me, yeah, I mean, the reason I became aware of that was ICT and even the mental game of trading is self-criticism is huge. Yeah, I didn't realize how negative I was to myself, how negatively, even on and off the charts, away from journaling, like thinking about things, I'd constantly be criticizing myself. It means you're a very high performer if you constantly criticize yourself, because you're always looking for improvement, but you have to do it in a very positive way. Otherwise, it just becomes negative. It doesn't help anything. It reverses what you're trying to do, actually. CJ Law of Psychology. Y'all missed it. You'll miss the psychology rants. Told you I'd bring it back. So since we've taken out that buy-side liquidity pool, in here, man, it's becoming very seek and destroy. I mean, this is real low probability to me. It's like training a dog. Positive reinforcement is key. Exactly. If you constantly give a dog a treat or whatever it may be for something that they're doing well, I mean, you're just training it. It's the same thing here. Our subconscious mind is very powerful. It's in fact, I want to say 10,000 times stronger than our conscious mind, but I may be wrong. TH, what's up, brother? Hope you're well. What is a low probability day for you? Well, I think there's a few factors, and I'll list them. This is again why I'd like sitting through a full year, because then you can really understand and see it on play. But the first off is economic calendar. That's the first thing that you're looking at, is the economic calendar. What is the economic calendar saying? Well, this week we have major news event drivers ahead of us. What does that mean? If there's major news event drivers ahead of us, that can mean that price becomes a little bit more difficult until that plays out. Why? Because it's going to engineer liquidity. Price is going to have a harder time running into large ranges because it's holding off for that major news event driver. If it's a Monday, like today, with no news event drivers, that's another signal or tip of the hat. Does that mean that I'm always not trading on Monday with no news event drivers? No, but it's a good idea to go into the session expecting or anticipating it could be low probability. It also has to do with the range before the day, before the session. If you have a large overnight range like we had today, if you had a large range the previous day, it's also looking at the state of what price is in. If it's consolidating on a daily time frame, a 4-hour time frame, whatever it may be, if there's liquidity on both sides of the board where you can make an argument for both sides, then that's low probability. Those are very basic things to look at as far as looking at a low probability condition. Dr. Joe Dispenza, yep. Good person to look into conscious, unconscious mind. Yeah, he's fantastic. Kadir, hey bro, I recently just created a plan and put a weekly profit limit to discipline myself and reduce the findings setup stress. Do you think it's a good idea since I've been missing some good days? I think that's a fantastic idea. Having a limit as far as risk for your day, if you can put a limit on where you can't, as soon as it hits it exits you out of the, you can't trade anymore. That is number one key, because if you get into an emotional state where you literally can't save yourself, I mean, the only thing that's going to save yourself is that last line of defense, which is like a third-party blocker through your broker, whatever it may be. I utilize it. It's something that I think all professional traders should use, because there's going to be days where you're just not dialed in. You're not feeling good. You didn't do preparation right, whatever it may be. Your emotional state's all, off the freaking hinge, and you just go on tilt. You make stupid decisions. I mean, you don't want to have that. If it's able to lock you out of the account at a certain threshold of risk that you're comfortable with, you should not be risking an insane amount each day. You should have an idea in your brain or an actual legit amount. This is how much I want to risk for the day, and be done. If you can't help yourself, get that blocker, get that limiter. As far as even profit, I mean, if you're too greedy and you're overzealous and you're overconfident all the time, then have that profit lock. Like, once I reach this, I'm done. Close the charts, I'm gone. I've never, this is just me, I've always stated this, I've never had an issue with greed. I don't know why. I've just had that contentment because I think I've learned my lesson too many times on trying to be overconfident, overzealous in this market. Very rarely do I do really well in a week and I want to keep pushing it. Usually I'm very timid and I just would rather take the profits and run. That's just me. But if you have those issues, get the blocker, man. It's whatever it may be. I know TradeAbate has it. I know some brokers, Top Step, whatever it may be, they have it. Utilize it. Doesn't mean that you lack control. It means that you're being smart. Good to be back, bro. Deadline for this week. I got you. Hope all is well. If we can like the video, if you're just tuning in, I appreciate it. Looks like we're about 250 viewers in here. Welcome all who are new. So since we've broken down in here, we've taken out the buy side. And again, where's that buy side and that wick at? Well, that's inside of this opposing premium, right? We're still in a bearish dealing range. From that dealing range high to low, you're taking out, this is internal buy side, taking out internal buy side and returning into a premium imbalance up here. Look at your higher time frames, which are your parents. What does your parent time frame say? Well, your parent time frame is this sell side imbalance on the hourly chart. We're still working within that. So where that buy side liquidity level is, that's internally being purged. We're seeing a drop away from it. Now, on a different day and maybe a little bit different characteristics, this is pretty good. That's a good little idea framework to a trade where you're on a higher time frame, you're taking out buy side liquidity within a higher time frame sell side imbalance, and you could look for the sell side down here. But since the condition that we're in today, and because of the economic calendar and because of what I've been seeing so far, which is high resistance, I don't trust price, and I don't really want to spend the mental capital to be inside of this. It's just not worth it. I know that Tuesday, Wednesday, Thursday should provide good opportunities, good enough for me to be content with this week. What's the point of trying to force this? I mean, high resistance, little tip, if you see high resistance playing out, it, for the most part, majority of the time, will always stay in it for the rest of the day. It will rarely ever move out of it. You'll see bursts in little segments of time where you see a little energy and a little bit of life. Usually a macro hint where you'll see a little burst of energy in a price. And then it'll move right back into high resistance. Sloppy, aimless, or really lethargic to move to something. At that point, is it really worth the mental capital? I mean, look at what we've done since the open. This is very high resistance, a little bit spotty price action to me that I'm not a huge fan of. The only decent little run was the one that we outlined, which was in here. Since then, it's been pretty aimless. Look at your 5 minute in here. Is this something that you could have seen right? These are all things that you most definitely were aware of and could have seen before the open. So if you know that going into the session, if you want to be a psycho about this, and it depends on your time zone. I mean, sometimes I don't have the time to do this, and I think through time and experience, you kind of memorize these things, but you want to have a notebook. You go in before the session, say, what are the characteristics of today? What should I anticipate for today? What is price action looking like? And if you write down, okay, this looks like a high probability day. These are the characteristics of today. I should be anticipating this. Today states it should be low probability, or I'm not so sure. Writing down, journaling, prepping before a session, and then going into the session is going to help you, rather than just waking up, rolling over, getting on the charts, and just trying to trade. That doesn't work. You really need to actually prep yourself, and even emotionally. Like, I have sheets in my private group, or my old private group. I don't want to make that a thing, but my old private group knew that I would literally go over sheets, and I still do to this day, where I have sheets of, in terms of psychology, what are the things that I'm looking at. It doesn't take that long, but to prep yourself is very important. Look at any professional athlete, basketball players, football players, anybody. They all go through drills and stretching and preparation before their games. They don't just kind of throw themselves into it. Did you trade anything yet? If you didn't, you missed. Yep, I missed it. It's refreshing to hear somebody who actually knows what he's doing compared to all the live streams out there. Thanks, CJ. I appreciate it. It means a lot. We're inside of this sell side amounts on the 1 minute here. And if you see, I'm talking a lot more today. I'm being a lot more talkative because I don't have any inclination of trading today. If there's a day where I'm really looking to trade, you're going to see me talking a lot less because I need concentration. So you're going to see the difference. I'm going to be a lot more emphasizing that this year. I already did it last week where if there's a day that I really want to trade, I need full concentration. I probably won't be talking a whole lot. Like I'll say, look here, look there, this is what I'm thinking, but not like today. What's this formation in here, just as far as tape reading? And this may confuse somebody, but from this low up to that high, what are all these down close candles? Stream lagging, it might be. Give me a second, hopefully the stream comes back to life. It looks like I'm in poor condition, but I don't know. Sometimes YouTube's really hard, so I'm not talking. It says poor. Let me know if it's still lagging. It looks like it's pretty delayed. Your answers are a bit delayed. That's good. Okay. In an FEG, when a volume imbalance is presented creating an FEG, do you use a volume imbalance to make? Yes. If there's a volume imbalance with a inefficiency, you utilize the volume imbalance with it. In that 1 minute FEG, why don't you include the volume imbalance? I'm not sure which time frame you're looking at. If you're looking at the mini versus micro, they're going to be two different things at times. How fast? My internet plan's fine. It's YouTube just has a really hard time at times. This never would happen within Discord. YouTube's live streaming service is just terrible. It really is. Hey CJ, thank you for forging a strong mindset, guiding us down the same path, possibly the most difficult thing to accomplish on the journey. Appreciate you very much. Nikki took a nice short off that bearish breaker and 1 minute FEG coupled. I got you. Again, these are things, it's not like I couldn't see this model playing out. Do I just trust the condition to play out today? No. But that's also your personality. I'm not saying that you can't take these things. People may be like, well, it just all depends on your personality. There's going to be trades that I take that you're not comfortable with. You have to listen to yourself. And obviously, we have already seen it. We know that people in the chat say it all the time, even last year. You don't take trades, or all you do is sit here and talk. Well, same thing if they say to ICT. It's also they lack emotional control and lack emotional discipline. But in here on the 5 minute, we're starting to trade through this propulsion block, bull shoulder block there. Look at the dotted line, we closed beneath the mean threshold, which is showing what? It's starting to change this order flow in here. Obviously, we can already read it from a 1 minute. We dug up inside of this premium, from this dealing range low to high. We dug up into that sell side imbalance, bearish breaker. We expanded beneath it. We dropped into the first presented FEG, back inside of this reclaimed buy side imbalance. So we'll see if we want to run for the sell side resting at 20,693. Camera angle is fire, looking like a handsome whistling diesel. I appreciate it, brother. Loads of trade you've taken I didn't like the setup for, we all see things different. Exactly, that's a good thing. And you shouldn't get, I don't get pressed about it at all. I think it's good. Can already see improvement in my chart markings from just a week of finding your channel and joining the live streams, forming that narrative. Good to mark things up, it seems you. Awesome. Very, very good to hear that. Especially if you're in a state of just trying to understand what the hell these concepts are and marking things up, seeing somebody else do it. It does help your training of your mind. And that's what ICT did for us. Especially on a 1 minute, man. That really changed the game when he live streamed in late 2022. Just watch him every day, mark things up. Even if he didn't even talk, I just liked the way he was marking things up. It would help train my eye. So the difference, right? This down close candle is a mitigation block and not a breaker. Because you can see high, low, higher high, then we have a lower low. But this down close candle is just your continuation. We have a lower low, lower high, lower low. Any reason you don't annotate London session highs and lows? Ross, I used to. I mean, I just kind of know where they're at for the most part. And that comes from the video of One Trading Session for Life by ICT. He would mark up and annotate the previous session highs and lows. It's a pretty good strategy. I'm aware of it. I'm not going to cite that, how you say it? The dictionary of ICT. So we'll see if we want to run for 20,693. I would be very surprised if we ran for, I gotta move this over, 641 today. I'd actually be surprised if we did. Thank you, Jafar. I don't feel like repeating myself, man. Utilizing the first presented FEG as an inversion here, so we'll see if that utilizes that to drop into 694. Should stay beneath it if it is really heavy. Should stay beneath the first presented FEG and drop into 694. JH, very good to hear. Zedin, I've already answered that, man. Just sit and enjoy it. If you look at ES has relative equal lows at 58.11. So remember this mitigation block, I took it off, but we'll put that back on. Sell side imbalance here. And again, I don't know how many times I got to state this, and it's like people, and I'm not trying to be rude. I dealt with this all last year. Like, I'll say something, and I'll say it for like 100 times throughout the session. I'll stop talking price moves, and people ask, well, why didn't you trade? What did I say about this whole thing? If price is high resistance, it rarely ever moves out of high resistance. Do I want to be trading in high resistance? No. Do I want to spend the mental capital to trade in it? No. So look at what price is. This is high resistance price action. I don't want to be trading it. So you're only going to learn these lessons, and I can already see like the difference in if you're willing to put in the work and sit with me, whether you think I'm a dick or not. The private students that sat with me all last year, now I can see even in the comments that they're on the same wavelength as I am. They're on the same wavelength where they're not eager, they're not trying to jump at things. But the newer students who don't understand what I'm saying in here, they're very fidgety to do something all the freaking time. And they also question why I say these things because they don't understand what's playing out, what I'm already thinking is going to play out before it happens. I don't want to sit through this shit. I don't want to sit through high resistance. I don't want to sit through difficult setups, even if I see price. Even if somebody said it earlier, why am I not trading it even though I'm anticipating lower prices? Because I don't want to be in the condition. The condition matters to me the most. I don't want to sit through shitty price action. I don't want to be a part of it where I don't trust it. It's low probability. You're only going to learn these things through time and experience, or just sitting, shutting your mouth, stop typing on your keyboard, and listen to what I'm saying. So, it's not trying to be rude. I talk on this way so people understand what I'm saying. And some people may be a turnoff, and I don't really care. But I'm saying things you need to hear, not what you want to hear. That's what, as a mentor and as somebody as a student, I would like to hear that. Somebody that would just yell at me and say, look, stop being a stupid idiot. A lot of times I made such stupid mistakes over and over again because I just wouldn't listen or I wouldn't do the things I was supposed to be doing. It's just not worth it, man. I'm trying to save all of you from a headache. Not just a headache, miserable nights, miserable weeks, and years of crucial time that you could just be spending doing something else. With your framework today, would it be a good idea to trade the outside edges of the range? I mean, you can, but I also don't want to. Just based off what I just did, I don't want to trade anything. Don't want to trade it. Typically, it's a good question, JH. Typically, I'm only considering the last down close candle for a mitigation block. Like here, this is different. Mitigations, I'm usually marking up the last lowest down close candle in that series. So this one here. If you get above the mean threshold there, or even if there's an inefficiency coupled within it, it's usually a good sign it's not working. Breaker's a little bit different because of the pattern, JH. It's a little bit different because you have that high, low, higher high. So anything incorporated within that range right there is what you need to incorporate. Sometimes you're only marking up the last singular down close candle, but since this premium imbalance was within that entirety, then I have to consider that entire range. Let me take a trade. Whenever you want, well, just tell me and I'll start trading. Did I trade today? Yeah, I took 100 different trades and we're up $1 million. We're rich, you missed out. Yeah, you click the button now. Could you make a short presentation? What do you mean by that, Leo? Like a selling presentation or a like a YouTube short? Hi, thanks for what you're doing. I want to ask if you can give me advice on how to improve risk management on a 50K account. Many times I blow them just because I over leverage and over trading. Well, it seems like you already know the answer to the question, right? Don't over leverage or don't over trade. If I was on a 50K account, which really means a $2,000 account when you want to look at it, people don't want to say that. If you're looking at a $2,000 account, I mean, you should be risking like $100 every trade, or maybe even $50 a trade. If you look at your drawdown, you want to split that to where you at least have like 20 to like 40, 50 trades till you blow the account. Should not be risking $500, $1,000. That means you have like 1 to 2 trade, 1, 2, maybe 4 trades so that, funded account's gone. You don't want to be doing all that. Your story. Well, if you look at price in here, again, what did I state earlier? If it's high resistance, it's probably going to stay in it. And if I understand it's low probability, I don't want to trade it. So, shout out all the people trying to push short ideas or push long. I mean, if you're not learning what I'm saying here, and you're looking at price, these are days where you're blowing money stupidly trading. Stay out of it. You don't need to be in it. What about your private students? Yep, they're all technically chartered now. They don't pay nothing, and they're all with me. You see them in the chat. They're all homies now. Lucky, no, I never trade crude oil. I only trade NQ. Nikki, exactly. I mean, sometimes it's just a very simple answer. Martin, most definitely. 1 to 2 micros, man, is especially what we're in the range we're in. Sometimes we're in a smaller range, but we're moving a lot on NQ right now. I mean, just in the last about 10, 15 minutes, I mean, we moved 100 handles. That's ridiculous. That's an insane amount of movement. Oh, we're moving higher now. Do I trade it higher? That means I must be buying it. No. Like, I'm going to keep my mouth shut. I want to say things, but... John, I already answered this. I don't know what timestamp, but I've already answered this like 4 times. Check your economic calendar. But I went into a more in-depth answer earlier. I'm sure if you scroll up through the chat, find where somebody asked me it, I went over it. I just don't feel like explaining it again. Alright, so let's flip this 1 minute here, since we've disrespected bearish PD raise. And again, do I expect these to be working? No. We're in high resistance, so it means a lot of things are not going to be working. But if you want to get your pattern recognition down, then you need to start doing this on a 1 minute. Well, what's this up close candle here? Inversion of fair value gap, you have your bullish breaker there, and now we have an inefficiency that's within that. Does that mean that that's going to work? And that's a unicorn. That's what ICT said. It's a unicorn, right? That's what Twitter PDF said. Anytime you have a breaker with an inefficiency, that's a unicorn. I got to trade it. It means a 100% win rate. I'm never going to lose. That, to me, is just a aimless, stupid way of trading. But as far as looking at tape reading wise, that is your bullish breaker, inversion fair value gap with your buy side of balance. In a different condition, that's good. That's really good. It's a really good model right there. Yeah, high resistance fools people all the time. Very well stated. It's very much like Medusa, where it sucks you into it. You think it's going to do something, then it doesn't do it. It reverses. It disrespects PD arrays. It just keeps coloring over lines constantly, and you get sucked into over trading because you're trading an aimless price action. Go out to your 15-minute for a second. Has this moved very much since the open? No. Hasn't done a whole lot. We've stayed in basically the same range that we've been in since this morning. Could it move out of it? And that's what people get sucked into, and even myself. I'm not saying that I'm some god. But with high resistance, or even consolidations, it can suck you into this idea of like, eventually it's going to move out of it. Eventually it's going to move out of it. Eventually I'm going to see this huge move, and I'm going to miss out on that huge move, and I don't want to miss out on it, so I got to be a part of it. I got to trade every single thing until it moves out of it. And then it never moves out of it, and you just look at your account, you traded it all the way down to nothing. That's the problem with high resistance. But again, with time and experience and ICT's knowledge, if you've already prepared yourself, anticipated that there's going to be high resistance, and you see it playing out throughout the session, since we've been live streaming, has this been out of high resistance today? Nope. Hasn't moved out of it. So why would you anticipate it to ever move out of it? It can for short bursts of periods of time. It can. And do I care if I'm not a part of it? Nope. Oh, CJ, the unicorn breaker thing's working. Why don't you trade it? I'm going to have too much fun on this YouTube shit this year because I really don't care. I'm just start flaming people. Hopefully it's for the better development of people that actually listen. What's this down close candle here? That'd be your bullish order block there. So you want to mark out 50% of that wick and even the body right here. So we should utilize that bullish order block. Since we're close in proximity to the buy side, we should utilize that to get into the buy side. Please take a trade. I already did, bro. You didn't see it. So we've taken out that buy side liquidity pool. Again, you should just be reading order flow, how we close above that down close candle. That becomes your bullish order block. We utilize that, propelled ourselves into the buy side there. Did a loss, but I'm happy with execution. It's good. Jake, yeah, I'm aware. I'm very well aware. So I got to mark up on the 1 minute where these 5 minute sell side imbalances are. I'm going to mark it up on the 1 minute, extend that to your right. So that's right where we're at currently. Hopefully everyone's listening today. Hopefully it's been a good learning lesson. Hopefully you learned something today so far. almost filled in about 50% of the opening range gap there. Almost there. We're about to come into the macro. We'll see as far as where we're at and what price is doing currently. This is where I would have to go out to a higher time frame and start looking at it and saying, okay, well, if we get above this imbalance, we close above this imbalance on the hourly chart, then I would have to look at it through the lens saying we may start seeking near side, buy side liquidity. So that high there, potentially this imbalance where it's right underneath the new week opening gap. That may be where price would want to lead to. Am I going to trade it? Nope. We're inside of this 15-minute premium sell side imbalance. So again, same thing as what we did last time. We've already took out internal buy side liquidity. We just purged it again here. We could expand above it and close above it. That would be the only certain way to be confident, at least in this buy side being ran. I don't even know about today, but that would be the way to actually be certain of it. This buy side at 20,912 and possibly this here 20,930. How we get there, how we deliver to it, who knows. See, I'm getting a little bit tired here. So I've been talking for an hour and a half. Tick the bell. I'm annoyed I didn't see you go to Members Body. I appreciate it. I remember Friday. It was a really good session. At least I'm very happy with it. Very, very happy. It's alright though. I'll be live every day this week. So since we closed above this sell side imbalance on the 1 minute, treat that as an inversion. Maybe we expand higher, but high resistance, we could drop off lower again, then look to expand higher. Don't trust it. Had 2 trades, 1 long, 1 short. I'm done for the day. Nice. We'll observe the macro. I'll probably sit here for maybe 5-10 more minutes, but I'm basically about done here. I'm happy with everything today. Look at ES. Look at this high over here at 2 o'clock. Right around 2 o'clock, 1:15-ish. If you look at that high over there, what is ES doing? ES is above that, right? So ES is way above this high here, where NQ is not. So what is that? That's a bearish divergence. Does that mean that price is going to send it lower? No, it's not. It's just a reading. It could mean that. It could. Even if this thing was to go higher again, with that divergence there, since they're slightly disconnected, That could mean that NQ could possibly drop lower again, then go higher. It could mean a complete outright bearish divergence, meaning that ES has made a higher high, NQ's made this swing high inside of this premium bounce, and we see it drop lower away from it after taking buy side liquidity again. Thank you, Romar. Perry, good question. Is opening range gap from the close of Friday and the open of Monday? Yes. And it's always from the close of yesterday, which is right around 5 p.m. Eastern Standard Time, to the open, which is 9:30 Eastern Standard Time. Would you show us where you would enter? Well, I just annotated throughout the whole session. I wouldn't have traded any of it. This is, again, I mean, I'm going to repeat this the last time. Just because there's PD rates, just because I can see things working, does that mean you have to trade it? Shout out the real ones that are listening. You can see coming in the macro, you're starting to see a little bit more speed into it. So it's a good study for your journals, is to be studying the macro. Macros are very, very helpful, especially in high resistance conditions. What's your thoughts on CRT? I don't care. It's not an ICT concept. It works for you, man. That's great too. How do you use it, the opening range gap? Well, you use it like a void in price, right? If there's a void in price, that void is like a magnet, and it's going to want to be traded to, closed in, filled in. That could mean 25% of it, that could mean 50% of it, that could mean 75%, it could mean the whole thing. I use it as a lot of different ways, and I think you would have to sit with me every day to probably understand it. I think it's very simple though. Members of the body. Nikki, would today so far be considered high resistance? Yes. High resistance with seek and destroy. I mean, is there short-term little trades in here? Yes. But to be able to, pick that off and be spot on with it, I mean, again, it just comes down to the idea of, like, do you really want to spend your mental capital and the risk to do it? It's just not worth it. Why feel the need to do it? I'm not saying you, Nikki, but I'm just saying in general, if you're having that thought, like, why do you feel the need to do that? If you could just wait for a day where it's clearly one-sided, there's good odds on your side and the risk is there, take it. But if there's a lot of things telling you it's going to be high resistance, it's going to be seek and destroy, it's going to be, a lot of risk, then what's the point of trading it? I don't get it. Did you explain your setup? What do you wait for and what your model entry is? I have a lot of different entry models and a lot of different things. The framework is the most important to it. And I think, again, I can't explain it in one sentence. I can't explain it in one video. I can't explain it in one live stream. You have to sit with me, or even ICT. It has to be months, man, to really start to understand it and be like, oh, okay, like, ask anybody who's been with me for over a year now. Now they understand it. And they all utilize it in their own little unique way. I can tell you it's a fair value gap. I can tell you it's a break. I mean, those are entryways into price. Those are just doors that you can open up to get into price, but that's not entirely what it is. Like, that's a good, I'm going to state this because I know it's redundant for a lot of people, but I think it's good. Like this right here, a fair value gap with an inversion with a breaker, the target near side, buy side liquidity. That's a good model, right? High probability model. It's the condition, right? It's the outside factors that you don't see on a 1 minute chart. You don't see that today is low probability. You can't see that. No, well, CJ, it worked. Why don't you take it? It's not the point. The point is the framework and the conditions that exist outside of the model that I need to see there in order to trust that. I think it's going to be it for me today. I enjoyed today's session. Hopefully, I know a lot of people don't chat in here, but the ones who didn't chat or anything and just been listening and taking notes, I appreciate all of you. I know there's a lot of studious people like that, like myself. I never really chatted, so I appreciate the ones just listening, learning, and the ones who are even chatting and learning as well. I appreciate all you guys being in here. But I think it's going to be it for today's session. We'll be back here tomorrow and the rest of the week. So I'll have the day log out tonight. Those are most important. Definitely good recaps and a lot of good gems in there if you haven't been watching those. I definitely recommend it. So that's going to be it for me today. Enjoy the rest of your day, everybody. Peace out.